Sarah, how's
Kevin,
it going?
it's going. This is like a really crazy week. Everyone wants to wrap stuff up this week, but I was like, where have you been? I've been pinging you for months.
What does that mean? Who is reaching out?
Customers wanting to get deals closed, like that we've been trying to sell that are now like ready to
That's
go
great.
this week. Um, just like everyone wants something this week from us. And it's like, why couldn't we spread out this work a little bit more?
Yeah, I think that's kind of unusual because we're recording this. It's December the 19th. So from my side, it's actually we power e-commerce companies, so we're just like operationally we're like super swamped, but like new customers wanting to come in, nope, because they're just trying to like get stuff out before Christmas. And
Right.
then like if you're talking to VCs, it's like now they're off for 2 to 3 weeks. And so it's kind of unusual. You have a lot of customers wanting to
Well,
actually come in before the end of the year.
the VC thing is weird too. I don't know if it's the stock market being up or like the rumors about, well, not rumors, but like that their interest rates are going to be lower. I, I am hearing from VCs like in ways I hadn't before, even with interest in like adding more money into the company. And I'm like, what? Where did this come from?
Yeah, it's I think that I think that it's basically interest rates. I think like that last week the Fed signaled basically like hopefully like three rate reductions next year. Hopefully up to maybe a percent off, which is just like everybody wants to get in at the bottom, right? So you would think that
Right.
now would be the bottom. I think that probably
As in,
now would not be the bottom. Like the bottom was probably 6 months ago.
right.
Everybody thinks it's the bottom, but it was actually a long time ago. Like that would have been when you could have got the best prices and got in, and people were actually looking for money. And so maybe I think probably people are trying to get ahead of like Q1, Q2. But yeah, that totally makes sense. I think I'm seeing the same thing from the VC side of things, that people are much more active than they have been over the last like year or something like that. So all good things for startups and everybody. Hopefully this turns around like the entire startup kind of tech ecosystem.
Yeah, I mean, this was like I'm Jewish, so I don't celebrate Christmas. So I usually, work that week when
Yeah,
everyone else is taking off and, fill in for everyone. But this was like the one time I had planned something over the week of Christmas
right.
because for 8 years,
It's
nothing's
like
been happening
right,
that week. And I'm like,
right.
I might as well just go on vacation. But of course, this year, for some reason, it just seemed like there's so much activity that
Yeah,
needs to get done by the end of the year. Like, I don't
that's
see how
crazy.
vacation next week is actually gonna happen. I'm gonna be working.
Well, what we wanted to do for this episode was kind of like a year-end wrap up. I'm not sure if we'll have another episode before the end of the year. So, do you why don't we kind of like this year has to me felt like one of the longest years in my career. And just like thinking back, I kind of jotted down some notes. I don't know. Do you have something similar? Do you want to go through like some big topics to kind of just remind people what 2023 was all about from like the founders and the tech side of things?
Yeah, I mean, it's been kind of a wild year, and I also think, for me, I've been reflecting back on, what I've learned this year that I wanna take with me to
That's
2024.
great. That's great. Well, I got a list of kind of like big things that I think have happened that people should be paying attention to. And they all have happened this year. I think that it was just kind of crazy. So one, uh, the banking system almost collapsed. So that was still
That
this
was
year.
this year.
Yeah. So SVB went under. They got bought out. That had a huge impact. Well, at least for a very short amount of time, but like the entire regional banking network almost went under. So that was like a really big thing.
Yep.
And also for startups, like anything over $250,000 was not insured. So there was a big potential risk of a lot of startups losing a lot of money. So that was like a big thing. I also had in here, I think it was still like maybe this was like at the trail end of 2022, but like it seems like right now, like the hype cycle is definitely AI. Like everything's AI based, and like, all VCs want to invest in AI, and like everybody's building. Like San Francisco is like hotter than ever because like everybody's in person building AI companies. But like it wasn't that long ago that like crypto was like the hype cycle. Like I think it was still like at the trail end of 2022, and so like
Yeah.
what one of my things was like these hype cycles are getting tighter and tighter. Like they're just like because things are
Right.
moving so quickly. Like crypto was the biggest thing, and everybody was invested. And this year it kind of unraveled. Right, FTX was down. Binance is going. They are basically going under ish. Like I think Coinbase is probably one of the only big winners out of this. Like what's going to happen next year? And I think another big thing like 2023, we really, I think startups and even larger companies really felt the impact of the higher interest rates. Like nobody was hiring across any companies, still major layoffs. The big tech companies laying off tens of thousands of companies, but then also the stock market was ripping because all of these companies were getting to more cash flow, getting more free cash flow, which was great. And stock market was really favoring profitability, and all of these companies are like in nature like high gross margin businesses and pretty decent growth, so they cut a lot of people, and they look a lot more attractive. And so it's still, that still hasn't changed. So like those are kind of the things that I kind of jotted down. What do you think as far as like cities? Remote work obviously still seems to be like the trend that people are following. However, I think that it's coming more towards, especially smaller teams I see that are building more in person. I don't know. What do you think has happened kind of over the last year?
Yeah, I mean, I think this was the year of profitability for a
Yeah.
lot of startups and really thinking about their companies that way. Um, and I hope, even as we enter a lower interest rate environment and money starts flowing again, like I plan to take that with me into 2024, that mindset, like the kind of let's burn as little as possible. Let's, actually get profitable. Let's have infinite runway. So I would say that's still like a really important mindset to bring into even a better landscape of 2024.
Yeah.
Um, I also think like the uh the thing about like the hype cycles being shorter is really important to keep in mind. Like it's so important not to chase these hype cycles, but
Oh,
to
it's death for a
have a
founder.
real thesis about something and then
Yeah.
realize that it's going to go up and down. I mean, even looking at crypto, like it's kind of back now. Like, you
Yeah.
look at how Bitcoin and Ethereum are doing, like they're up again at the end of the year. And it may, people that were like, look, this is just the crypto winter and we have to stick with it. Like those companies may now see a new day in 2024 if they're able to stick with it. So I don't think crypto is by any means over. Um, and so
The
I
hype
think
cycle for crypto definitely is.
right, right. But like remembering that these things have good and bad times, and as
Yeah.
a founder, you have to, stick with your thesis and realize it's not always going to be in favor in the kind of broader market landscape, and that's okay. That's kind of normal.
Yeah, I think that's really important. Like I think that, so I would say that and even going through and doing this podcast, I'm really glad that we did it, and also really glad that you're such a big part of it as well. I've had a lot of great we've had a lot of great episodes together. But also just like bringing more like people on.
Yeah.
Like I'm active on Twitter, you're super active on Twitter. Like I'd say that overwhelmingly, like VCs are more active than anybody on Twitter. And like
What else
that's
do they have to do?
exactly, that's a great point. Like a lot of the people that we brought on, like some of our best guests, like they're not active, they're not giving out
Right.
these like this like insider view from our founders perspective. So like going back to your hype cycle comment, like I just saw like Jason Calcanis just tweeted something, and it's like if like basically like everybody should be building AI right now. And it's like if you just like get your two smartest friends, and like I'll
Oh
give you
yeah.
money or
And I'll
something
get
like that.
and by the way, tell me so I can get in on the deal. Like
Yeah,
he's
but
just trying to
also
build
like
deal flow.
But that is the worst advice for a founder. Like, you should not be chasing anything. What you should be doing is you should have like be in an industry, something else. Like once you're in the hype cycle's already started, like you're too late.
Right.
Also with from VCs as well. Like even looking at Jason's like portfolio of companies, like his big two wins were what Robinhood and Uber. Both of those were like not during the like Uber was not in the hype cycle.
Right.
Robinhood was not in the hype cycle. Like
Right.
of fintech companies were not hot. Like he's even like not even taking probably if he would have looked back at like his biggest winners, he's not taking his own advice. Like starting a company when it's the whole industry is just getting so much money poured in to your competitors, by the way, is just
Right.
a silly thing to do. And so like that's why I am sticking like I'm gonna be in probably in like logistics tech for the next like 20 years. Like I think that I have like and hopefully that's through Airhouse and like I think you just gain so much insights by just focusing on like one area. So if that is
Yeah.
AI, then like hopefully you've been in it for like 5 years. Like AI has been around. Like AI has been around for forever. So like hopefully you gain some insight, and so you have a step up on the competition because VCs they have a pool of companies, and that's why like you'll hear all of like there's this hype around all of this, and everybody's raising rounds, and like yeah, the VCs have their best interest is going to get the smartest people to build something and try to get it into your deal or whatever. But like you as a founder need to take the other perspective as like, what advantage do you have? And also you have so much competition out there. There's all and VCs are power law businesses. So like it's gonna be the top like 5% of companies that even like return probably anything decent. So like just go somewhere deep where like nobody is really looking at and be like an expert in it. And that's kind of like the way that I've kind of structured my and I think about my career. I don't know if that's similar to you as well.
Yeah. I mean, I think like as a, you're a second time founder and like you found this area that you now have unique insight. Like that's a real differentiator. Like someone else can't come and learn everything you've
Yeah,
learned from having done this and really focus on this industry. Whereas if you start a company in a completely different area, if you go from like enterprise to consumer, like you may not see some of those second time founder gains that
right,
make second time founders so much more effective.
right.
Um, you have some learnings, but like it's harder. Yeah.
Yeah, and you don't need to necessarily be a founder. Like there's a lot of other
Uh-oh.
like you could be.
You might have lost Kevin.
Oh, can you hear me? I can hear you.
I can hear you, but you're frozen. Okay,
Oh, that's
there we
fine.
go.
Yeah,
Now
we
I
were
can see you.
they'll clean it up. Like you don't need to be a founder. You could work for a startup and like you could all of a sudden like what's a great example? So my wife used to work for Cruise, a self-driving car company, and I think there was early employees, a bunch of them. So Cruise's whole thing was like they're based on like machine learning and like that's how they actually like can detect like what's a stop sign, what's a person and all that. They just need a ton of data. And I'm pretty sure that some of the largest machine learning infrastructure companies, they either came out of that or Cruise, that would just be an example. It'd be like you're at a company that like you're working for somebody and it's like, oh, you're now an expert at this thing. It's like, oh, there's other companies that need this. That's a great way to actually find insights without you having to go and like found a company. And then also hopefully that you can learn something from the founders there as well if you are a first time founder. But just like going and like we try to share our mistakes. Like I fell into the trap. Like I just blindly followed Uber for my last company. Like I didn't know really anything about the shipping industry at all. And I was just like, there should be an Uber for shipping. And like that's what I built. And it turned out to be like that didn't actually make a lot of sense. Like from a venture perspective. And like that was like my like hard way of learning. But there's a lot of other ways to learn. But it's like don't fucking chase the stuff that everybody else is doing. You have to have some if you want to be successful in some way, or you could build something smaller that you don't need to go and raise a ton of money on and all those different things. and you can take the profitable angle as well. But yeah, I really hate. I'm like I probably if you took all of our podcasts and like the time I say is hype cycle
Yeah.
and like how I just fucking hate it so much. It's like it's just a trap for founders. It really,
Yeah.
really
I
is.
think the other thing that like you touched on this, but that is a real trap for founders that has kind of been debunked in 2023 is like the thing that your success is measured by how many people you employ, and
Yeah.
that to grow the business, you need to grow the number of people you employ. And I think that's also
Yep.
like a very VC driven way of thinking. Like, if we invest this amount of money, what kind of headcount will you add with that? How fast can you add that headcount? And then what does that headcount grow in terms of your revenue? And I think 2023, we kind of like debunked that, like, with all these layoffs. I mean, it's terrible. Like, I'm so sorry for anyone who lost their job. Like, that's never fun, and a terrible position to be in. But I think it was overall very good for the industry to realize that
Yes.
growth doesn't need to just come from headcount. I think AI has helped us with that realization. Um, and that sometimes even having less people can move you faster. I also think we really destigmatized layoffs.
Right.
And like, I remember when we had to do a riff in the beginning of COVID, and there was this whole thing around like, what if the press finds out? Like, that would be the end of the world. They
Right.
found out we laid
Yeah.
off 6 people. They would write that Winnie is done. And
And they
now,
used to do
like,
that. They used to do
yeah,
that.
like,
Yeah.
oh, they laid off 10% of their workforce, therefore they are going under. Whereas now, like, it's almost a badge of honor. Like, we had Ryan from Electric on the pod, and he
Yeah.
kind of talked about,
I was just gonna mention him. Yeah.
the layoff, and, it's terrible for the humans involved and the human element, but it can be really, really positive for the business and can actually represent that you've made sort of a step function improvement in the business, that you've actually worked people out of jobs because you figured
Right.
out, in his case, like a channel approach to selling or something like that. So I am optimistic that we will not treat layoffs as so catastrophic, and we'll actually
Yeah.
think about, you know, in the first place, do we need to bring on all these millions of heads to then lay them off? Or can we actually be a little bit more thoughtful about how we grow and realize that it doesn't have to be through headcount?
Yeah, no, when we had him on from Electric, yeah, when he mentioned that they actually started to get more stuff done once they did that major riff, like, I think, and here's a question for you, like, I think that right now, like, we're at the start of like a bull run in like in the public markets, definitely, but private markets are going to follow. I would question, like, is it gonna go back to the way that it used to be? And then is it just gonna be us that kind of realize these things and that we will run our companies like kind of some of the other people that have run really great companies with lower headcount, and have been profitable, right? Like, you
Yeah.
look at some other companies, like, what's a good example? Like Atlassian, perfect example. Like, I'm think pretty sure they were profitable, like, from early on, or like Zapier or something like that. Like, they didn't raise a lot of money and they were like profitable pretty early on. Like, some people figure this out, but I wonder if, like, once there are, because there are gonna be the markets are gonna, they all go always go in cycles, and we're gonna get back to the same. I don't know. Hopefully we won't get back to the 2021 craziness, but like,
Right.
we'll get back to the same, like, VCs are competing for deals.
Right.
You could take a lot of money. Oh, your competitor took a lot of money. Like, they just hired a ton more people, and then you get a lot of first-time founders that haven't been through these experiences, so, like, I kinda think that it will happen again. I do wonder if, like, the stigma of layoffs will be as big. I think just, like, tech press in general has changed because there's just
Yeah.
so many tech companies out there that, like, does it matter if, like, this one company that, like, nobody's heard of actually does a layoff? Like, I wonder if that's changed,
And
but
tech press, I mean, all the press now is behind a paywall. So I actually like,
yeah,
it's been amazing to me in the last 8 years, like, what a change it's been. That, like, you used to get like a Business Insider article written about you and it would end your career, and now it's like no one can read it. So it doesn't actually matter. Like, I've seen still some like really pretty gnarly pieces about companies or people, and like no one's read
No one
them.
cares.
So it's like, does it even matter anymore?
What was the last
Unless you're
one? The Carta CEO. That
oh
was
yeah,
one of
the
the last
Carta
ones.
CEO who
Yeah.
like, negged himself by emailing all the customers. Like no one would have seen the article if he didn't email all his customers and
But
point
I
it
don't
out.
think anything happened. Like,
And nothing
normally
happened. He's still the CEO and Carta's still doing
yeah,
fine. I just
yeah,
logged into our Carta account to approve some option exercises. So
right.
like no worries there with Carta. And I think it's kind of a nice breath of fresh air for founders because, you don't have to worry about like a minor slip up or a layoff or, one wrong move kind of taking down the company or your
Right.
career. You still want to try to treat everyone with respect and not do anything or make any mistakes, but like mistakes happen and
Yeah.
layoffs happen. And like it is a little bit, mm, you know, I have less anxiety at night knowing that even if Business Insider wrote a takedown of me, no one would see it.
Right.
Like who subscribes to Business Insider?
Well, now aren't don't they have a deal with Chat GPT? So maybe they could be more.
Right. That's how you'll get it now. That's how
What
people
has
will see
Sarah
their
done?
content.
How is Sarah at the
Like,
net as a CEO?
I mean, no one knows.
Yeah, it's the tech press cycles. I wonder how much that's impact the market. So like, and that I think's been driven by a number of different things. Like I think for one, there's just a lot more coverage, right? Like there's just a lot more tech companies out there. Like when I started my first company, that my like real first venture back company a decade ago, like there just weren't that many like companies out there. Yeah, we were one of the
Right.
like the hot companies, and so like we did like somebody scooped like our A round deal, and like that was a big like news article, and it's like somebody was like monitoring the SEC. It's like, oh, they're
Uh,
raising the Series A, and like
can you
that
imagine that
n-
being written today?
that would just wouldn't happen. And it's like now you have to like beg people to try to do that so you could get some like awareness to maybe hire some people or something like that. Like you can't even get anybody to pay attention to you because I think there's just so many like other things that are happening. And like I also remember like, do you remember back in like the Uber and Lyft days, like all that drama going back and forth, and like what turned into was just, or even just like ride sharing in general. Like you had like Didi and like all these competitors and everything, and like the hundreds and billions of dollars that were being thrown around, and then it turned out like they way overhired, and like they actually created like not very efficient companies, even though like at the heart of it it's a marketplace and like they should be extremely efficient. But like
Right.
I don't know if it was the tech press or like the VCs that were throwing around all this, but like it was kind of crazy that what was happening. So I do wonder. My hunch is like we're going to return to that state again. Like once the market kind of turns around, I do wonder if like layoffs are going to be a big deal. Like even internally, like I think like I don't think that they'll get written up in the press or whatever like they used to. But like internally, like I think that right now it's very much an employer like more friendly uh uh or kind of cycle we're in. We're going to get back to it's going to be like everybody's going to be trying to be hiring employees, and we're going to be paying a lot for them, and the big companies are going to be paying astronomical amounts again, and then it may be like a layoff is like a sign that you're not doing well, and then you'll have maybe a portion of your company that will potentially leave because they've kind of lost confidence
Mhm.
in like, and they just have so many different options. So I do think that a lot of the stuff that happened before will happen again, but I sure hope that it doesn't happen like it did in 2021.
Yeah. I mean, I think I hope that people will be more careful as they hire now. And also be thinking about, how can AI mean that I maybe don't need to hire like 10 people to do this job, but could have
But
5
see,
people.
okay, but take yourself back to like, I don't know if you want to use like Twitter for an example, right?
Yeah.
Like it's it's not necessarily like all of the founders that are making a lot of these calls. Like, yeah, they are like the we're allocating the capital to go and do these things, but like we eventually hire like seasoned execs and like that
Right.
want to kind of build their like
Right.
basically mini
Yeah.
company. And
That's right.
I don't necessarily think that that's ever going to change. Like I think that right now hiring's like frozen, but like the next AI companies, I think that they're all going to look at each other and be like, we're all competing for the same thing. And like OpenAI, like I know they just signed this huge like office lease in SF. Like I bet they're gonna hire a shitload of people. And like I think it's gonna probably return to the same way that it did before. And I think even like the Facebooks and like everybody that did those massive layoffs, like I could see everybody building up like the different VPs building up their like little mini armies again, and
Right.
they kind of do measure their success and like how big their team is and like that type of stuff, and they can and how much they're able to move and so I don't know what is your thought there? Like you work for Twitter and like it definitely was not as like it was probably way too many people, not as efficient. Like I guess I could definitely see us. We're gonna go back to that. It's that same place.
Yeah. I mean, I think you're right that employees want to hire people because it's a measure of success. And so, like, the more people that can report to you, the better. So there's always going to be that pressure. I'm just hoping, at least from the top, from like CEOs and the board and, the CFO looking at the profitability of the company, there's going to be more pushback now where it's not just a given that you need to add headcount to grow. And, hopefully we start to look at that,
Yeah,
a little more critically. Um, I also, I wonder about, and this was another topic I wanted to bring up with you, like
yeah,
the different exit paths for founders, and I do think we've had to get like we've seen in 2023 like a little more creativity around where you can go with your company.
right.
Um, Prior to 2023, like really all that was talked about if you were a venture backed business was like you were going to IPO. Like it's IPO or bust. And, maybe you could get some liquidity along the way via a secondary, but you're really aiming for IPO. And now I feel like we've started to have some of these other paths enter the conversation. And, we've explored some of them at Winnie and trying to
Yeah,
understand what they might look like. So things like private equity
right.
became pretty popular as a path from like venture backed company to private equity, um, you know, acquisition as a
Yeah,
path.
yeah,
And I just saw a discussion on Twitter today about, your company actually throwing off dividends or,
right.
purchasing shares back from venture investors.
This is what
Um,
Sahil from Gumroad does, right?
the what?
You know, Sahil from Gumroad?
Oh, yes, yes.
Yeah, yeah.
I follow along with his like quarterly board meetings and
Oh,
things.
yeah.
But he was kind of like a, you know, very unique, like, oh my
Yes.
God, he's crazy. How can he be doing it this way? And, that's kind of why I got famous. Whereas now, like, I actually think more people are considering that route that he kind of paved the way for.
Yep.
Um, and so I, I'm hoping at least like going into 2024, we have some more of these paths available.
Yeah.
I think that's just better for the ecosystem when there's more options other than IPO, especially now with like the IPO window basically being closed.
Yeah. Another thing just to note on news, like recently, well, this year, there's actually been quite a few like larger transactions that have been not been allowed to go through. So like
Yeah.
Figma this last week, their acquisition from Adobe was deemed what was it by the FTC?
So
But
actually, like, I mean, there were three regulatory bodies: the U.S., the EU, and the UK,
that's right.
and they all took like a really ridiculously long time. But the U.S. was actually not the blocker; it was the EU and the UK,
That's right.
um, which is kind of interesting for us. Like at Winnie, we're going to go international in 2024, and as we
Yeah.
think about some obvious markets, like the UK would have been one. It's so similar to the US in terms of the childcare market, but like, shoot, I don't want to expose myself to like regulatory authorities in the UK if we were to ever sell the company. I mean, that could block the whole deal
Right.
for a market that's, a tenth of the size of the United States. That seems silly.
Yeah. Yeah, it is kind of crazy. Yeah, the EU is definitely, or the UK and the EU have taken a very interesting stance to tech. But kind of going back to your initial question, I think that there definitely are a lot of different exit paths. Like I never really knew of like I don't I come from a computer science background. Like I'm not a finance person, so like I didn't even know like private equity was really a thing. Like I started off I was like, yeah, I'm gonna IPO this company. Like that's
Right.
what like you look at all the other companies that have went public, and like that's kind of the venture path. But like you definitely have a lot of different options. I'd say that actually one that has been kind of taken off the table over the last few years is the acquihire option. Companies just don't do those anymore, which
And
is
you know what
interesting.
also went off the table is the SPAC option. Remember
Yes,
those? That had a
SPACs
good
were
few
the
years.
worst investments ever.
Mhm. Now that's done.
Yeah. But it is interesting to think, like, as a founder, like, when you start a company, it's like, what do you really want to build? Like, do you think that you are going to build a public company? Or maybe you don't have to make the decision, like, but they're just knowing that there's all these different paths, but a lot of the decisions you make early on, they kind of set you up, right? Like if you want to stay independent, or like if you want to get bought out by PE potentially, or sell a lot of secondary for yourself and maybe the employees and maybe still run it, like you're going to have to run like more profitable than you would have with like straight VC, which is typically like looking at a larger acquisition or the IPO road, which is just growth at
Yeah.
all costs, more or less. And it definitely should influence how you think about hiring and scaling the team and all of those, how much money to take on the table. Because once you take on too much like capital, like some of these options are not available for you anymore.
Yeah, and just like, for people that aren't familiar, and I wasn't until I really dove into the PE world, because like you, I just didn't come from that background. Private equity tends to buy businesses, one, that are profitable. The more
Yes.
profitable, the better. Um, so that's very different than venture. And then two, they're looking for businesses that they understand well, that they know how to grow, and that they're
Yep.
not trying to grow 10x next necessarily. They may be happy with 4x or
Yep.
even, potentially less depending on the stage. But they want that to be like well understood. Like, oh, you do these things that PE knows how to do well, and like finding efficiencies in the business.
Yes.
Um, Doing less R&D,
Right. Right.
and we could grow it to 4x in this number of years, and then we could sell it to a
For
PE
more.
firm that, maybe is later stage.
Yeah.
Um, so that's really, there, or like some PE firms are really just about running profitable businesses
Yeah.
that are private. And so, that's an interesting path to know about, because if you start a venture backed company and then you realize, like, actually, our growth is maybe slower, but more predictable, and our costs are not ridiculous, and we could be very profitable, like, PE may actually lead to a better outcome
Right.
and be more of a natural fit for your business. So it
Right.
was kind of, I think 2023 taught a lot of us about the PE route. And then,
Yeah.
as Ryan said on the last podcast episode we had him on, it's also helpful as a founder to think like a PE firm. Like,
Yeah.
what would they do to find efficiencies in your business? And could you do those things kind of proactively to
Right.
get some of the gains? And even maybe talk to a PE firm and like find out what kinds of things they might do for a business like yours to give you some ideas.
Yeah. And his big thing was just like, um, just give yourself all of these different options, right? Like
Yeah.
ideally, like if you have taken the venture route, if you obviously initially you have to continue raising rounds, you have to be going after growth, but then make sure you have in the back of your mind all the different levers you could pull to make yourself to just like not remove different options. So if that is so stay close to other potential acquirers,
Yeah.
like build a relationship with them and like continuously like partner with them. That those are the most likely acquirers that you're going to get. You should all also be like understand like how your business is being run, and like if you had to get super profitable, like know the different levers, and be running like a high gross margin at
Yeah.
at least, I actually have a question there. If a lot of these AI companies are going to be high gross margin, which kind of just like completely screws up the entire thinking of like throw as much venture capital into AI as possible. Anyways, that's a sidebar. But like build a high gross margin business that can be extremely efficient, and then all of a sudden when you have like I don't know $10 million in EBITDA, like you have like a really good business that like PE potentially could buy. And then like he's also talking about this as well. Like if you can get to like if you see a path to $100 million in ARR at a decent growth rate, like you also have like a road to potentially IPOing. And so like if you really want to like build a really if you think that the opportunity is there to build a really big business, like keep all those options on the table and continuously be thinking about this type of stuff. I think that like I never did that before, and like you never know what's going to happen. Like everybody comes out and thinks that they're well, not everybody, but a lot of people do when they're first starting out. They take money and they see all of the venture fund, all of the huge valuations people are getting, and then when the IPO window opens, all of the companies are IPOing, and everybody thinks that's the only path, but that's really not the case. But to make yourself have these options, you need to be aware, like even the acquisition side of things. Like if you don't create a relationship with potential acquirers over multiple years, like the chances that you're like an acquisition is going to happen is very low. Like these acquisitions take a long time. Like
Yeah.
Figma, for example, like I'm pretty sure that Dylan was like pretty close to the Adobe people like really early on, and they had a relationship over many years. It's not like all of a sudden some like big incumbent comes to you and it's like we want to buy you. That's like very, very rare. It's like over many years, and you don't get that unless you put like the hard work in to make those relationships.
Yeah. I've found like some of the best relationships are like ones that are natural. So not like, we meet for coffee once a year.
Yeah.
Those could be okay. But it could be better if like you can actually partner in a significant way with, a bigger business that could potentially acquire you in a way that's like not going to be a detriment to your existing business or give away too much information. But if there's like a natural way
Yes.
to have some kind of product partnership or something in place, they can start to see how you're growing and performing and how you're kind
And
of
get to know
adding to
you
their
too
business.
and the
Yeah.
team. Yeah.
Like how, responsive and amazing your team is. And then, it's kind of a natural touch point because you're partnered on this thing. So I feel like those are, always good ways to keep in touch with your potential acquirers without like needing to necessarily just like chat them up all the time.
Yeah. I have a quick question for you, Sarah. When you started Winnie, it was what, so like 7 years ago,
It's gonna be 8 years.
8 years. Um, what did you think when you first started? Did you think like we're gonna build like this massive global, like initially it was basically like Yelp for parents, right? That you
Yeah,
started with,
yeah,
not
yeah.
to, but like, what did you
Uh,
think? Like, did you think that you're building like that big of a company and like we're gonna IPO, or did you like I just want to build a company and like we'll see what kind of happens? Like, what was your initial take, and has it changed?
I think everything seemed like easier when it was more
Yes.
abstract. Like, oh yeah, of course. Like we'll just build it and it'll grow and people use it and we'll make a lot of money. And then you start actually doing it and you realize like it's not so simple. And kind of building the business part of it is even harder. Like building a
Right.
thing people use is one thing, building a real business from it is really challenging.
Right.
And I'm going to spend actually almost none of my time on the actual product and like 99% of my time on sales.
Right.
I think most
Right.
founders don't realize that they're signing up for a sales job.
Yep.
You were just whether it's to investors or to
Employees,
potential acquirers or to actual customers or to
customers. Yep.
employees, you're selling. You're 100% selling.
Yep.
Um, so I didn't know any of this, but I think now, 8 years in, I see clearly like how we would get to these different versions of ourselves. Like I
Right.
actually still do see a path to IPO. I think
Yep.
it's um now is not the time to like start down that path. It would require an influx of capital, I think, to
Yes. Of
really
course. Of course.
charge that direction, but I think it's possible. Um, I think there's also a path to, just having a profitable business that can
Yep.
grow and, maybe be acquired, or maybe you want to pursue one of these dividend paths or investor buyout paths. Um, and right now we're really in the vein of like keeping our options open, and not, you know, canceling off any of those paths. But I think it is more clear to me how we would do it.
Right.
And therefore I know like what it would be hard. Any of these
Right.
things are going to be hard. And
Yeah.
I think we could get there, but it's going to be hard. It's going to take money. It's going to take years,
Yeah.
for different, depending on which we pursue. So it's like, it's no longer like, oh, sure, we could start this thing and in 5 years we could sell it. And, I know now that that's not how it works.
Right. Yeah. It's a interesting journey. And what was the question? We went over this before, but the Nvidia CEO was asked, if you could tell yourself and your co-founders one thing before you started the company, what was it? And he answered, he's like, don't do it.
Yeah.
Because like you just don't know how hard it actually is, and it's just like you continue going, like you do it because you don't like you think that things are going to be okay, and you kind of just like persevere through that. And I think that's like a sign of like, if you don't give up, like that's a really good sign of a good founder. But it is way harder than anybody ever thinks it is going to be. I think that's like simultaneously, I think all of the guests we've had on here, everybody is just like, and also everybody that I talk to too is just like, it's way harder than you think. It's not fun. There are a lot of fun times, but like overall, it's like extremely stressful. Like even like raising money and getting down to like the last month of like runway or something like that. Like there's so many stories about like things like that have happened, and it's just you're the person that everybody is like counting on, your investors, your employees, like yourself, your family, like all of that. It's like way harder than anybody else expect than
Yeah,
you
I think
expect
as
going
much as
in.
possible, though, like try to enjoy the journey. I think I flipped that
I'm
once I
terrible at that.
realized it was going to be a long road. Like, how can I really enjoy this road? And like, part of it was like, you know what would be really cool if I could like employ my husband. Like, he'd
Yeah,
be
that's cool.
awesome and it'd be really fun to work together. And
Right.
like, I can do that because I'm the CEO. And
Right.
like
Right.
it has turned out to be like so much more fun the past, over a year when he's been working really closely on, things that I can now like feel like I can fully offload and have like someone really running it that I trust. Trust with my life. So like that's been cool. And then, like I think about what are other things I can do and try now that I am running this business that I wouldn't have access to. And so
Yeah.
like there are a number of things that are like have opened up to me running this business that I
Right.
wouldn't have, the ability to do if I was just a person working at Google, even though that may be lower stress. And so like I'm trying to
Yeah.
enjoy and savor those things. Uh and also like even during like the crazy times, like we were impacted by that, like SVB shut down.
Yes.
That was our
Us
only
too.
bank. We had no access to any other funds. I was
Same.
like pulling my hair out of how I was going to pay employees that
Yep.
Monday. I was calling up people that I was like never talked to and just asking for a loan, like
Right.
just
Wow.
doing all these things that were so out of my comfort zone, felt so weird. Like no one wants to be begging people for money. Um, but I did them because I had to do them. And I also put myself in the mindset like, okay, this is actually like really exciting. Like I
Right.
get to be involved in something that the entire world is caring about and paying attention to right now.
Yeah.
and I get to go on national news and
Yeah.
be on TV and share the experience, and everyone is looking to me for like how you handle a crisis like this.
Right.
And I have the opportunity to like not crumble, but actually show that there are ways to persevere through this. And even though
Right.
it's stressful, it can be done. And like, yeah, and we persevered and we made it to the other side. And,
Right.
we are better off for it. And now we focus on treasury management as one of the core competencies of a CEO. But like, even in crisis moments, there's kind of this unique opportunity as a founder to, kind of cherish like what makes this special that I couldn't experience in a different role. So I try to, because I'm going to be doing this for a long, long time, try to
Yeah.
enjoy where I'm at and, you know, appreciate that all these great perks of being a CEO and being a
Right.
founder, um, you can't get them in every job and for every company.
No, and I think also just like the even though that it continues to and we keep on bringing Ryan up because he's the most recent guest we had. We had a lot of great insights. Like it doesn't get easier, but like
Right.
your I think your tolerance for pain just like continues to like increase, right?
Right.
Like if you probably remember the first time that you had to fire somebody, right? Like how like I don't know if that was at Winnie or if that was before, but like that's nerve wracking. It's like, what are they gonna do?
Yeah.
Like this is so bad, and like now it's like this person's not performing. Like we gotta let them go. Like it's like now it's easy, but now you're dealing with much larger problems, and so like as you continue scaling, like I think like I definitely would not choose another job. Like I love what I do and also just the ability to like learn like and even like this year, yeah, like I think like on the finance side of things, like everybody had to kind of learn more about like even like 2 years ago, like what happens when interest rates go really high? And like what happens when your bank like what like you don't have access to your money in your bank account and like just things that were just completely out of your skill set that you just learn and then you kind of become like a mini expert in that and then it's the next thing that you need to worry about. So like I love this deep like learning and even both of us like getting more into sales. Like I love sales as well, like actually like selling to customers. Like before I was totally like either and if initially I was like an engineer, I love building stuff, and then it was more on the product side of things. And now it's like I love that hunt for the big deal and closing that customer, and then also continue to make them happy and like all those different types of things. Like I think as a founder, you just are able to just if you're willing to learn those things, you just don't get that opportunity anywhere else. And so
I agree.
it's
I mean,
it's
the
great.
sales stuff, like being good at sales and being good at like customer success is
Yep.
useful in every aspect of my life now. Like it is amazing how much better I am at everything I do
Right.
because I've been practicing selling to customers and keeping customers happy. And like I have used that to deal with difficult situations, like with my kids or with like relatives or things where like normally I would have probably just like flipped out or been like, "Don't talk to me," or like, "I don't wanna deal with this." Now I'm like, "Okay, I know exactly, like, how to handle this kind of situation. It's
Right.
not that stressful. I can, like, go in with this mindset. It's a special period of time where I have to act like this and kinda eat shit and,
Yes.
be nice.
Yeah.
Then it's gonna be over, and if I eat shit for an hour, then I'm gonna have, like, just a much better relationship going forward, and I've used that now in, like, my personal life,
Right.
uh, and it's, like, it's amazing. Like, this
Yeah.
is, like, coming from someone who, just I've never been good with people. That's never been my strength, never been a people person, and I've
Right.
had to really hone that skill for 8 years.
Yeah.
And now it's paying off. Like, it turns out being good with people is a
It's
really useful life skill.
yeah, no, that's so true. Um, I had one last thing on my list, and not necessarily that things have changed, but kind of touched on it a little bit, but like a trend that I wonder, it hasn't really changed in 2023. It definitely changed in 2021 with the pandemic, but like remote work and like remote work or hybrid uh uh coming into the office or
Yeah.
coming into the office entirely. What are your thoughts and like maybe even like some predictions on what's going to happen?
Yeah, it seems like companies are swinging in like wildly different directions.
Yep.
Like some are now really emphasizing in person, and some are like, let's take full advantage of remote. And my prediction is that people will really pick and choose to the benefit of their business. Like there will
Yeah.
no longer
Yeah.
be a template for how you have to operate. And like
Yep.
we just hired someone from the Philippines. I'm really excited for that.
Right.
Um, I, you know, I think our employees will still be majority US based, and
Yep.
especially for, certain R&D talent and sales and roles that have to be based here. But I also think there's an opportunity that is now, you know, the world, um, where we can actually find really unique talent, that actually might not even be available in the US. Like some people in the US
Yeah.
just don't want to do certain jobs for a long period of time
Right.
that are like fine jobs. They're just like not people enter Winnie
Yeah.
in some of these roles hoping for a different role in like 6 months. And like I don't blame them for being ambitious. And I would love to invent a new role in 6 months. But the truth of the matter is, like, there are just jobs to be done.
Right.
And I kind of want someone who's willing to do that for an extended period of time. And so I think that's the kind of possibility that's going to open up now, um, with this more like, choose your own adventure in terms of remote and in person work.
Yeah, it's gonna be really interesting, to see what happens. I'm definitely, like, very, very pro in office. Like, I
Yeah.
go to the office 5 days a week, and I just love being around other people. I feed off other people's energy, and, I would like, as we continue scaling, like, that's gonna be a big part of it. Like, obviously, in 2021, we had to hire remote, and I think that for us and just me, like as a CEO, like there's obviously always going to be like a component of remote work, but I think like there's as a startup, there's just so much you lose out on, like especially early stage when you're really trying to, and obviously you could augment that, right? Like you could have people in like once or twice a week or something like that, or have more offsites or something
Yeah.
like that. But like there's just so many times that like all of a sudden I just got the team together in person and we just solved this problem that's been like been going wrong for the last 3 months or something like that. I'm just like, or it's like I'm able to just feed off. So like I know personally what I want. And like that's gonna mean a big percentage of the company that I'm building is definitely going to be in person. Like I really don't I think that Zoom and whatever Google Meets and just um communicating over video like has their place. And I think also for like sales is actually awesome because you don't need to go on and travel that much,
Right.
like, especially, like, you're selling some big deals now too, and, like, before you'd have to be traveling a lot and, like, going in person and, like, selling in person, like, that's changed the game, I love that, and that's gonna continue on, but, like, I just think, like, when you're building something that's got so much, and actually a startup has got so much creativity in it, and, like, you need to continuously iterate, and, like, I just don't think that you can, and maybe that's just the way that I'm built, and I just feed off everybody else's energy. Like, you just can't replace that remote piece, and so, like, but I think that I totally agree with your initial point. I think that it's gonna be different for every single type of company, and it's gonna be like, if it's gonna be a startup, like, are there gonna be successful startups that IPO that are 100% remote? Yes. And it's gonna be, like, a combination of, like, the founders and the culture that they wanna build, and you will be able to both recruit people that are remote, but also you will also be able to recruit people who want to work in person. And it's
Yeah.
just going to be, there's going to be a lot of options for everybody. And there's going to be companies that are like, I could see us like, probably not like, I think a new thing that's going to happen, and I've been watching just some reports in the real estate markets, like some of the hottest markets are like I think I saw like Sacramento was one of them.
Oh, wow.
Because yeah, like people just will like take that insane commute into work like once a week, and they will be able
Uh,
to have like a lot less. They just have they don't want to have to live in like the Bay Area and pay like the ridiculous rents or mortgages or whatever. So like I think that's also going to be another trend. Is
right.
like people are going to work in like kind of the outskirts of these major cities, but still like commute in. And then also maybe when people listen to, I think also even for me, like going on longer road trips or commuting longer, like I listen to so much podcast, so I don't even really think like I just learn so much that now that's an actual good thing. So I don't even really mind the commuting. And so I think, but I think my guess is that there's definitely going to be a lot more people going back into the office, a lot more employers wanting people to go back into the office. It'll be interesting to see when the pendulum swings back to more employee friendly, and there's a lot more like kind of just money sloshing around in the companies, and you have to basically do whatever the employees want. If that'll go back to more remote work, but I think that overall there's going to be like a bunch of different types of companies that have different ways of working, and it's up to you as the employee and also the founders or management teams or whatever, like how do how you want to. I saw an interesting interview with was it the COO of Shopify, which they're 100% remote, and
Hmm.
they have hubs, and they built their own like and they're a massive company too, public company, and they built like their own like OS for working remotely. They thought that they're the only company out there like is making remote work at scale.
Hmm.
I don't know if that's true or not, but like there is a lot of work that you have to put in to
Right.
replicate what you could do in person. So it'll be interesting to see what kind of happens, or maybe it'll go more into like everybody's like now in person 3 days a week, and that's the new normal. I don't know. Not sure.
I mean, I also think like some of those gains you talked about being in person, like that can be very important also with your customers and,
Totally.
partners and people you interface with. And like using your time to do more of that because you don't have to commute into an office.
Yeah.
Like that's kind of been our philosophy. Like we'd rather spend our money and time, visiting with our customers than trying to get the whole team together, for example, for an offsite.
Right.
Um, so, I mean, I think it's a mix of both, but I do agree, like, huge gains can happen in person. Um,
Yes.
and, it depends a little bit on the business as to, like, where you need to make those huge gains. Like, for me, do I need to be sitting with our engineers every day? No. Like, they just need to be, working and motivated, and it is good to get together so that
Yeah.
they are still excited and motivated, but, like, do I need to be with them all the time? Probably not.
No.
But do I need to be with our customers more? Probably yes. And can we, move the business forward that way faster?
Are you talking in
Probably.
person?
Yeah. Yeah. Like me sitting with an engineer while they're writing code and like interjecting my ideas is probably just annoying and slowing them down.
Yeah.
Now, I do think like some being with engineers is good because you want to keep them excited about the business and
Yeah.
focused on where you're headed and, thinking big picture, but like it's limited. It's limited how much time you want me
Right.
distracting our engineering team. And even like our product team, because I could just start adding things to the
Yeah.
roadmap
Yeah.
and
Yeah.
like
Yeah.
sharing all my ideas, but, spending some time with customers can be like a huge unlock for
Right.
learning about their business or a challenge they're facing or another way we can cross sell to them or something like that. And I feel like I would rather spend that more of that time and energy in
On
person
customers.
with them
Yeah.
instead of in person with, you know, the team. So I think for us the pendulum is swinging more in favor of like let's actually get our sales and success folks and me and the founders and uh, product managers that are building the product spending more time in person with
Yeah.
the people we're building for rather than more time in person with engineers unless there's like specific engineers that want to be more customer facing.
Yeah. 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 So are you bringing back the steak dinners then? Is that what you're doing?
We're trying, like, it's hard. A lot of customers, like, they're not going into the office either, and so they're
No,
like,
no,
Do we really have to meet in person?" We're like, "Yes, please." But then we try to, like, bring along a few different team members because it's also an opportunity for us to bond and socialize
right.
if we're not seeing each other regularly. So trying to, like, kind of do a hybrid where we're using the conference we're going to or the customer we're visiting or whatever trip we're taking to
Right.
kind of get folks together.
Cool. Yeah, no, I totally agree. I think that's another huge learning for any first-time founders that are listening, like spend a lot of time with customers, like continuing to listen to what their pain points are and everything and don't be afraid to like try that new thing. Like Sarah, you've pivoted your business like entirely
Yep.
us, and we haven't really talked a lot about what we're kind of doing, but we definitely have based on both partner feedback and customer feedback as well. Like you just need to continuously talk to your customers and it's fun, but it's really tough. So if you get in person, that's even better. Why don't we wrap this episode up?
Yes.
I don't know if this will be the last episode of 2023. If it is, thanks everybody for listening, and we'll see you next year. If not, we might have an episode next week. We'll kind of see what happens.
Happy holidays.
Yes. All right. See you, Sarah.
Bye.
Bye.